So for question 1, we are supposed to look at the transactions that are taking place, and we are supposed to place them in the respective columns in the table over here. The first one has already been done for you, cash purchases of goods. So the first thing you need to do is to identify the two accounts that will be affected. When you use cash to purchase goods, the first account that's affected is your cash in hand. Your cash in hand will go down. The next account that is affected is your inventory, because you're buying goods. Inventory is coming in. The more you buy, the more inventory will go up. So when you want to decrease a cash in hand account, you would have to place it on the credit side, because this is debit in nature. So to decrease a debit in nature account, you place it on the credit side. To increase a debit in nature account, this is an asset, you place it on the debit side. The source document here is a receipt, because you use cash to purchase goods, so you would receive a receipt. And the journal here is a cash book. The next one, you are selling goods on credit. When you sell to your customers. So credit customers are known as trade receivable. The more you sell to them, the more they owe you. So the more they will be increased. Because you are selling goods, this is what we call a sales revenue. The more you sell, the more your sales revenue goes up. So to increase a debit in nature account, your customers are your asset, you will place it on the debit side. So you will debit your trade receivables. This is an income account. It is credit in nature. It is going up. To increase a credit in nature account, you will place it on the credit side. So sales revenue, credit. Because it's on credit, it is always an invoice. And since you are the seller, you will be the one issuing the invoice. So invoice issued. And the journal here would be a sales journal. For the third one, credit sales return. So your customers now are returning goods to you. So the first account that is affected is your sales returns. So the more your customers return you goods, the more your sales returns will go up. Okay, and your customers, your credit customers will go down because they owe you less now because of the return of goods. Now, sales return is a contra income account. Contra income account means that it is debit in nature. So if you want to increase a debit in nature account, you would place the sales returns on the debit side. Trade receivable, remember, is an asset, so it's debit in nature. It is going down. You will place it on the credit side. Okay. In this situation, your customers now are being overcharged because they return you goods, they don't owe you that much, they're being overcharged. So what you need to do is to issue a credit note. All right, you want to issue a credit note to decrease the amount that they owe to you. And the journal is simply your sales returns journal. For the fourth one, we are now buying a delivery van and it's on credit, right? So the first account that you should identify is your motor vehicle, because you buy a delivery van, so it's going to go up. And it's a credit purchase. Now, a lot of students place trade payable as the answer. However, this is not goods. If it's not goods, it is not meant for trading. Therefore, you have to say other payable. Other payable will go up because now you have a liability. You owe this person now. So other payable will go up. All right. So you're going to increase your asset account. If you want to increase a debit in nature account, you place it on the debit side. You want to increase a credit in nature account, you place it on the credit side. Okay, once again, this is a credit purchase. So every time it's a credit purchase, I know it's an invoice. And because I am the one buying, I do not issue an invoice. I will receive an invoice. Okay, now my journal here cannot be purchases journal because this is not goods. It has to be my general journal. The purchases journal is only when I purchase goods inventory on credit. The last one, credit purchases return. So that means whatever purchases I bought on credit previously, I am now returning it. So my inventory is going to go down. Okay, I bought it from my trade payable. I don't owe my trade payable any more money, or rather I owe my trade payable less, so my trade payable will also go down. So if I want to decrease a credit in nature account, I will place it on the debit side. I want to decrease a debit in nature account, I place it on the credit side. So debit trade payable, credit inventory, and my source document here is a credit note because right now I am being overcharged. Alright, so I should receive a credit note. And of course, my journal is a purchases returns journal.